The secular outlook is the analysis of structural forces at work in the system, because every decade is characterized by a few very important inflection points, key events like the pandemic, and this leads to very sustained relative investment trends. We're actually spending 2 days together listening to external experts on selected topics, brainstorming together on really structural forces at work in the system, the economy, the financial system, and therefore it's very valuable to take distance from the day-to-day distraction of business activities, sit down, exchange, share opinions, confront, and try to carve out these so important secular trends. Once a year is actually probably the optimal rhythm. We've had 4 decades of disinflation, then the pandemic came, and we are in the midst of an inflation scare. And it's very difficult to understand what is the cyclical part, what is the structural part of that inflation increase recently. Behind the potentially structural impact on inflation is an important shift in China, where the working age population is shrinking. China's policy priorities have shifted dramatically. It's one of the key even this year, the so-called Common Prosperity Objective. This has global implication given how China is imbricated in the world economy today, being the world's factory de facto. The second trend, of course, is the climate challenge. Everyone agrees we should reduce carbon emission. It's an expensive exercise. It's probably inflationary short term. But these new technology will probably lead, after a few years, to actually lower energy prices and a positive productivity shock. So it might be inflationary short term. It's probably still disinflationary long term. We are in the midst of that transition. I think for the moment, it's very early in that transition. And that is the point at which it's the most difficult to shape a strong view on such things. So we'd rather keep a balanced approach, not tilting portfolio too heavily towards one or the other asset class that benefit or suffer from those inflections. We think the economy is still expanding. We see no recession in sight. So it's still the expansion regime of the Julius Baer investment approach, and accordingly one should be invested.